Hi, Tomiki. Hi, Brave. And hi, everybody who is listening later. We hold our community calls on a bi-weekly basis. Now at 11 a.m. Eastern and 3 p.m. UTC. We had a period of rescheduling. Now we have found our slot, and we're going to be meeting with our community members always on this cadence. This week we have Brave on the call with us today. He was unable to join as he is joining a conference in London. And we're going to be going over the state of DeFi. Brave has published another great report. Well, actually, it's the third issue of the state of DeFi report, and it's immensely helpful. So he's going to give us an overview of the state of DeFi in yields and risk. Hi, Billy, if you haven't checked it out, I was just mentioning Brave's amazing state of DeFi report. The third issue is now live. And then we're going to segue into a new cover product announcement. I think this has been very well received by some members already, and Brave will walk us through the details of our new cover, and then he will highlight some of the news from our partner OpenCover. On OpenCover, you can buy cover on layer 2s of your choice, which I find very convenient. And then we'll introduce you to a new series hosted by the DAO community team. We'll be interviewing important security partners from DeFi starting from tomorrow with Grid Plus. Justin will be joining in a conversation with Brave. We'll briefly touch on that, and then we'll have the chance to answer any open questions. Without further ado, I want to ask Brave, how is the state of DeFi in risks and yield this week? Brave, take it away.
Yeah, for the last week in DeFi yields are still pretty high. I had talked in my report about just the pullback on ETH. We've seen that move back a little bit. We got as high as a little over 4,000, but now we're kind of bouncing somewhere between 3,200 and 3,700, and I think that'll kind of be the case for the next the next several weeks, if not the next couple months. But yeah, that's my personal take. We'll see what the prices bear out. But because there's been more price action, we've seen more activity on chain, and some of the things that we've seen are an increase in the base rate for stablecoins, which in my report I highlighted is somewhere between 18 to 25% now, which is up, I think, from when I started about like 1.5 times. So we're seeing a lot of the stablecoin rates in DeFi increase, and a lot of it starts at lending protocols, right? So we've seen Aave and Compound have adjusted their interest rate curve models so that they're charging a higher price when lending markets are at a high rate of utilization, roughly about the 90% point. So we've seen across Aave, across their markets on L2s and on mainnet, and the same thing for Compound, that utilization is at or above 90% very frequently. There's a large appetite for leverage in the current market. And as a response to that significant demand in those high double-digit APYs for lenders, we saw that MakerDAO decided to push through a pretty aggressive change, which increased the stability fees, which are their interest rates on their MakerDAO CDP vaults. And they pushed those up somewhere between 15 and 20%, which is unprecedented for them. And they also boosted up the DAI savings rate to 15%, which is the highest that it's ever been. So that rate has also kind of bolstered higher stablecoin yields across DeFi. And so a lot of the rates you're going to see for stablecoins start at the lending protocol level, because that is one of the fundamental money Legos that people build on top of with other protocols. So that is definitely something that you can see. Another lending market that Yearn is built on top of with their Juice vaults is Ajna. And Yearn has this really great interface. It's called Yearn Juice Vaults. You can find it right in the Yearn UI or at juice.app. And in the Juice vaults, what they do is they deposit DAI, ETH, or USDC into the Ajna markets, and they're able to juice the yield, so to speak, with extra token rewards. So for the DAI vault and the USDC vaults, again, we're talking double-digit yields. From what I checked this morning, the DAI vault is around 35% variable APY, and the USDC vault is a little over 24% variable APY. I cover that in my report as well, but that one's been very interesting to watch. Bjorn has used Ajna as a growth money Lego, and that's another lending market out there. There have been some interesting ones too. Some stablecoin strategies that are a bit more complex. The D-Hedge perpetual delta neutral vault, which goes off of rates underneath in synthetics. They've been running this delta neutral yield strategy, which has been something that's been very popular. People have been talking a lot about that kind of strategy with what Athena is doing as well. But the D-Hedge perpetual delta neutral vault has been earning somewhere around 63% variable APY based on the last 30 days of performance. So there are some pretty high yield opportunities out there as well. We've seen the same on Pendle. So for Pendle, for ETH or stablecoin yields, we've seen things pretty high. The SUSD Pendle market for selling your yield if you're an SUSDE holder has been very high. That's been about 90% fixed APY. For people that are willing to sell their shards on USDE on mainnet, it's like 196% fixed APY. And then people who want to provide liquidity for AUSDC, so Aave USDC, on Pendle, on Arbitrum, that's going for like a 25% variable APY. So again, seeing really high APYs. And then for things that are a bit more complex, and I note this in my report, the riskier things, Hyperliquid on Arbitrum is one. It's similar to, it's a perpetual exchange. So it's similar to GMX and their GLP, but they have a hyper liquidity provider vaults that's offering about 133% variable APR. As a depositor in that vault, you deposit USDC, and you are a counterparty to traders within hyper liquidity. So it definitely comes with risks, but again, that's just kind of showing the range of yields we're seeing on stablecoins. As far as the ETH base rate, this is always going to be tied back to ETH staking yields. So it's still between 2.5 to 5%. There have been some other ETH staking protocols that have emerged here in the last couple months that are growing TVL and growing deposits. They offer a little bit of a higher APY. I've noted those in my report as well. But yeah, that's what the ETH base rate is always going to be, is right around that staking yield. We've seen lending markets trying to increase demand. Aave launched their merit program on mainnet. And with that, they are offering incentives for people that borrow WETH on mainnet and also people that borrow Go on mainnet. So that should, theoretically, if it works, that should bring up the variable APY for WETH lenders on Aave mainnet. Right now it's at 1.63%, so it's still under that base rate. There was a lot of WETH demand on the compound V3 markets on base. Right now it's sitting at 4.37%, but earlier last week it was around 63%. So I'm not exactly sure what the demand for ETH was on base, why it was so high, but yeah, it was definitely up there last week. We recently launched Fraxlend protocol cover as well, and so the Fraxlend markets for WETH have been high consistently. The rates on WETH within the Fraxlend market is around 33% variable APY. So yeah, again, we have cover on that. All the things I've talked about, we have cover for within Nexus Mutual. And then for Pendle, for the liquid restaking tokens, still high fixed APY for the Renzo ETH if you want to sell your yield and your points, for Kelp ETH, and for EtherFi ETH. I know EtherFi just launched their token, but there's still those markets where people are selling the EtherFi tokens and the points that people are accruing for EigenLayer as well. So those markets are still pretty hot on both mainnet and on Arbitrum. You can check those out. Again, more information on that in my report. We've listed PX ETH from Dinero, which is developed by the Redacted Cartel folks, and PX ETH is a tokenized version of ETH. It's an ETH derivative. There are market strategies for correlated assets, other liquid staking assets. as well. You can find that in the report. And then we also listed FX protocol, which is a protocol where you can take ETH, deposit it, and then you can have on the one side like a lower volatility stable coin, and then on the other side like a higher volatility exposure to ETH with leverage. That's been very popular for the FX protocol. They have their stability pools, which are similar if you're familiar with like liquidity stability pools. You can deposit certain assets in there and earn double-digit yields. Again, that comes with risk if there's ever an extreme market event where they need to basically convert your staked ETH into assets to maintain stability within the protocol. That's something that is in there. But again, these are all things that are popping up. So even for ETH, you can still earn double-digit yields. So it's been kind of crazy to see the market pop off and for yields to be so high. There's still a lot of high yield opportunities out there for people of all experience levels, whether you just want to deposit some stable coins into Aave markets, or you want to go a more risky strategy that has more smart contract and more market risk, some of those things. We have a lot of different protocols listed on Nexus, so you can definitely protect against smart contract and some economic risks on lending markets as well. You can buy cover for that. And I don't think that the yields we're currently seeing are going to go down anytime soon. ETH might bounce around in price, but I think that these high yields are here to stay, especially as long as the lending markets are kind of driving them with some of their interest rate settings as well. So, yeah, it's been very interesting. I've enjoyed writing these State of DeFi yields reports. It's also a way to highlight some of the covered yield opportunities that are out there. But yeah, issue 3 went out last Friday. Issue 4 will be out this week. I publish these reports on every Friday. You can see these published on my Twitter and Farcaster accounts. But again, my goal here is just to kind of give people an overview of where the DeFi markets are at, what yield opportunities are out there, and where you can buy cover to protect yourself against smart contract and different technical risks in DeFi, since that's still a pretty prominent issue. I mean, there's been billions lost here in the last several years to DeFi hacks, and that's one of the things that we're working to protect people against more within DeFi. I really love to see 2024 be a safer year for DeFi and to protect more people against smart contract and economic risk in DeFi. Before I move on, does anybody have any questions about this overview? If not, I can just drop an update in the thread below after the call so people can reference back to that if they'd like to check that out. But I will move on and talk a little bit about our new cover product, which is Bundled Protocol Cover. I'm going to make this announcement right after we... Oh, okay, Billy. I'll invite you up so you can talk. Hey.
Hey, Brave.
How's it going?
It's going okay. How are you?
I'm doing well.
Well, I wanted to ask you a quick question. So, my understanding from like previous cycles is, insurance broadly was taken out by users across DeFi protocols because of, higher APYs that they could earn on farming. And, throughout the bear, it was less, there was less cover being sought by individuals because, the cost of the insurance relative to the yield opportunities weren't quite there, but wanted to, see if that wave has kind of shifted with the higher yields that you've been referencing across the various lending opportunities and just yield opportunities generally in the DeFi space.
Yes, yeah, that's exactly right. So, during the bear market, yields in DeFi were relatively low. There might have been some like higher yield opportunities, but they were kind of few and far between. Now that we've seen things really take off, we are seeing growth in cover sales. So we're starting slowly. That's still something that the team is heavily focused on, is selling more cover, growing cover sales. Right now we're at about 44, 45 million in active cover. That's something, again, that we're working to grow over time. We're working with OpenCover. I'll provide an update on what OpenCover is doing, but they are helping us sell cover on L2s. They're built on top of the Nexus Mutual protocol, and they're making cover a lot more accessible to people on L2s, where the transaction fees are considerably lower than they are on mainnet. And yeah, we have a lot of things in the pipeline as well on kind of different ways that we're making it easier for people to buy cover and protect themselves. And different initiatives that we'll be announcing in the near future about ways that we're expanding distribution and kind of getting the word out there about Nexus Mutual. and making it a lot easier to protect yourself against risk. So there will be a lot more updates on this, but we are seeing a lot more inbound about people looking to buy cover, for people looking to buy cover in size. So a lot of that is just getting some of these newer protocol cover listings up. I think that with bundle protocol cover, which I'll go over here, this will be a really big benefit for people as well, because for the longest time people have asked, if I buy cover for Beefy, does it cover against the underlying smart contract risk, which for normal protocol cover, it doesn't. But flowing into this announcement, this new protocol cover offering, which is bundle protocol cover, allows you to buy one cover NFT to protect against smart contract risk down the full stack. So if you're depositing into Yearn's Juiced Vaults, for example, which I touched on, that one Yearn Juiced Vaults bundle protocol cover is going to protect you against smart contract and economic risk within Yearn and Ajna smart contracts. If you're depositing into a Beefy vault that has Balancer V2 and Aura Finance exposure underneath, that's going to cover against all three of those, all three of those protocols and the smart contract risk there. So we have 6 initial listings for this, which is for Yearn Juice Vaults, Beefy and Curve, Beefy and Compound V3, Beefy, Balancer V2, and Aura is one bundle. Quenta and Synthetics, we've had a lot of people request this in the past as well. And then for one of the Pendle strategies, Eigenlayer, EtherFi, and Pendle bundle protocol cover. What I will say is that before we announced this, just last week, somebody had asked about the Eigenlayer, EtherFi, Pendle bundle cover, and I had said, we actually just listed this. It's in the UI. We haven't made an announcement yet. And the first person that I had mentioned this to went out and bought $300,000 worth of cover. So I think that this is going to be a really popular product, and I'm excited to work on the marketing side of this, kind of create some awareness, work on some co-marketing with some of these protocols, and get the word out about bundle protocol cover. But again, that announcement is going to go out after the community call today. And you'll see more announcements about these individual listings as we push those out this week. So I'm excited about this. I know, personally speaking, the gas cost can be kind of high if you're buying, let's say, 3 different protocol covers. But just being able to buy one cover to protect against, the underlying smart contract risk is going to be great. I'm definitely going to be using it. And like I said, we started with these 6 initial listings based on past requests and historic cover sales. And over time, we'll add more bundle protocol cover listings as well. If there are other bundle protocol cover listings that you'd like to see, you can join us on Discord and let us know, or you can drop a comment underneath the Twitter Spaces call thread, and I could definitely check those out when we have our next product meeting, which we have every Wednesday, where we review listings and talk about new products as well. So I'm very excited to protect more people in DeFi against smart contract and economic risks, and again, make 2024 a safer year for people to participate in DeFi. And hopefully, as we onboard more people through some of these L2s, those people can buy cover and protect themselves while earning in DeFi. I'm happy to take any questions about this.
Yeah, no, that's a really interesting product. I think the protocol that I work with, we're going to be launching, vault partnerships with some vault developers. So like Yearn, for example, an Enzyme, and so that would be really interesting to have multiple layers for depositors in those vaults. So no, I'll follow up with you about that. That's really cool.
Yeah, absolutely. And it can be protocols we already have listed or ones that we don't have listed yet, Billy. So feel free to follow up and let me know. So we're happy to add new listings and everything. So yeah, just reach out and let me know what vault you're looking for.
Awesome, man. All right. Well, thanks for the great call. I have to jump, but enjoy the rest of your day.
All right. Thanks for joining us. All right. Any other questions on bundle protocol cover before I move on to talk about some OpenCover updates? Okay. If not, I will move on and talk a little bit about OpenCover. So the OpenCover team has been working on adding more protocol cover listings to their platform. Their goal is to have all of the protocols that we have listed all available on OpenCover, so you can buy protocol cover from Nexus Mutual on L2s like Base, Optimism, and Arbitrum. For those of you who aren't familiar with OpenCover, they are a cover distributor built on top of the Nexus Mutual protocol. OpenCover is helping to expand access to protocol cover on L2s, where the gas fees are considerably lower. so we can protect everyone against risk regardless of the amount of funds that they are earning with in DeFi. Users don't need to KYC to use OpenCover, which is one point of friction that some people often bring up. So, you don't have to KYC. You can just use OpenCover. You can buy cover on an L2, and this should help us reach more DeFi users. The OpenCover team recently added Pendle and DHedge to their platform, and they'll be announcing another listing this week on Wednesday as well. But yeah, they've helped considerably. They've sold, I think, about 1.5 million in cover since they launched. And so far in March, OpenCover has sold over 600K worth of cover. So I'm definitely excited to see more cover sales coming in through OpenCover and, expanding protection to cover holders of all sizes, not just whales, but everyone in between as well. So yeah, keep an eye out on OpenCover. You can follow them on Twitter, or you can kind of check our account for updates as well, because we often share updates about OpenCover. I'll move on and talk about some updates from the foundation. So we've shared a few updates this week. One of these is about the FTX reimbursement. So in 2023, the mutual paid out claims for FTX halted withdrawals. And as part of the custody cover wording, if people receive reimbursement for a failed custodian, they have to assign their bankruptcy claims over to the mutual. And so the foundation's chief legal officer has been working very hard per the mandate set out in NMPIP 205 to recover those reimbursements and bring those back into the capital pool. So we've made progress on this. There's been 1.68 million in USD reimbursed to the mutual to date. That is held in a multi-sig that the advisory board controls. Because USDC is not a whitelisted asset in the capital pool yet, it hasn't been sent directly to the capital pool, but these funds will likely be used in the cover re-deal, which we highlighted previously in previous NMPIP that members approved in December. But this will be reflected in the capital pool balance once the cover re strategy is executed. We're expecting that more recoveries are going to come as the bankruptcy claims are sold. And the mutual expects to recover at least 2.48 million from these FTX claims, if not more. So that full announcement is on the forum on the FTX reimbursement, so you can check that out for more info there. The team is still focused on shipping new cover products and growing cover sales. Bundle protocol cover is the first new product. We'll have some more cover products to announce in the near future here. In April and May, we'll have some things to announce, as well as we'll be able to provide some updates on the cover re-deal. Pew, on behalf of the foundation, proposed NMPIP 213, which went up for a vote last week, and members voted to approve this. The vote here was about updating the speed at which the price changes when people are buying cover for a particular product. So right now, if a cover product's listed, it'll start at an initial price, and then it decays down to a minimum price. If a bunch of people pile in and buy protocol cover for, say, Pendle, the dynamic pricing within the mutual is going to move that price up. That spreads cover buys across the different staking pools, and it also makes sure that we're not underwriting risk at too low a cost if demand for a specific risk is high. The previous price change speed was 0.5%, which is relatively low, so it took a long time for these cover products to come back down in price to a level where cover buyers wanted to actually buy cover for protocol cover or any of the other cover products that we offer. And because of this, there was probably some times where we were missing out on certain cover sales. So this has been updated to 2% per day, which should bring down cover pricing to a level that people are willing to pay. This will bring down the pricing much quicker than we've seen in the past. So this should be a big improvement now that members have approved this. You can see the details on that on the forum as well, and you can look at that vote outcome in the Nexus Mutual UI. And I wanted to share that the engineering team is finishing up testing on an update to the cover buy UI. This should improve the user experience and make it easier to buy cover in the UI. There are also going to be some notification settings in the UI that you can set up if you want a reminder about when to renew your cover, a reminder about renewing your stake as an NXM staker. We'll have different notification services in there. If you're waiting for capacity for a certain product, you'll be able to set up a notification so that you're alerted when capacity is open on a given cover product. So there's a lot of work being done on the engineering team to get that UI update ready to ship. We'll share more announcements, and of course, we'll make an announcement on the blog and across our socials when that new UI is live. Those are the updates I have for the foundation side. I'm sure if there's anything I'm missing, I can have Hugh post an update in Discord when he gets back, but he is currently at the Digital Assets Summit in London. But yeah, just an update that the foundation and DAO teams are still working hard behind the scenes to sell more cover and deliver on the updated roadmap on the forum. And then I will transition over to an update about the interview series. Here, Sam, if you want to give an introduction to this, or I can give an intro to the series.
Of course. Thanks, Brave. Yeah, we want to take a little time to introduce our Covering DeFi interview series, which we will launch tomorrow with Justin from Grid Plus. Our intention behind organizing these interview series is to have a space where community members, people interested in DeFi, or just anyone interested in security in DeFi can come in and listen. And we'll be interviewing up-and-coming protocols and established players like Grid Plus at first, but we want to open the space up to include users' experiences in DeFi, about staying safe in DeFi. So I'm quite excited about this series. Tomorrow we'll have Brave talk with Justin from Grid Plus, and there's going to be a little surprise. Just to heat things up, we'll be giving away one Lettuce One cold wallet to one of the listeners, and I think it's going to be quite exciting and interesting. I'm looking forward to the talk tomorrow. Brave, I also want to ask you what we are trying to establish with Covering DeFi and what your thoughts are for the upcoming talk.
Yeah, I think for the Covering DeFi interview series that we're going to run, one of the main benefits is just talking with other DeFi builders, people working in the security space, and people using DeFi, just to hear what people's concerns are, talk to the people that are building security solutions in DeFi. A lot of it will be focused on risks that we cover and areas where we have expertise. But also, I want to talk with people who are working in areas like the Grid Plus folks, talking about hardware wallet security and some of these risks that we don't cover but are still important building blocks about staying safe in DeFi. So, we'll talk with Justin tomorrow about Grid Plus, their Lattice One hardware wallets, and the work that they're doing to help people stay safe against a lot of these very common risks that we're seeing in DeFi, like blind signing attacks, people accidentally signing malicious transaction requests. All of these things, the Lattice One has been a great solution. I personally use it myself. So I'm looking forward to talking to them about some of the updates on the Grid Plus side, talking about ways to avoid, some of these scams and some of these different attack vectors in DeFi, and just talking about how to safely custody, crypto assets on chain if you're managing your own finances. We're also going to be talking with some other builders. We have another one that's going to be lined up here in April. We're going to talk with the folks that are building Vaults FYI. And I think broadly speaking, it's just an opportunity for us to talk with other builders and other security experts in the space, and then kind of educate people on what some of the latest updates are on the security side. Talk to people who are underwriting risk within the mutual. Talk about people within our ecosystem, and people broadly across the DeFi space. So I think it should be interesting and engaging, and it's just a good opportunity to come in, listen to an interview, and get updated on a new DeFi protocol, or people that are working on innovative solutions to make it safer to transact and interact within DeFi.
Agreed, and there's no end to learning more about staying safe in DeFi. I guess that's a never-ending journey, and I'm looking forward to beginning that journey with our community members. Thanks, Brave. Now I want to briefly recap the last week together with you guys. We have the analysis up on the forum where we look at how much the mutual has sold in cover and what fees we have earned. It's quite interesting to me because it shows me what more responsible degens or more responsible DeFi users are doing in DeFi. And last week we sold about $3.8 million worth of cover and earned more than $32,000 in fees. And like Brave said earlier on, one of the bigger cover buys were for bundled cover for Eigenlayer, EtherFi, and Pendle. I'm personally also looking forward to purchasing more bundled covers because it's less in gas fees and you won't have to purchase 3 different covers. I think it's very practical. And I think we're going to see more cover buys throughout March in bundled cover. Looking at the entire month of March, we have sold about $10 million worth of cover. So it's definitely heightened activity still going on. Like in February, we had quite a lot of cover sold week over week. And if you want to learn more about our recent numbers, recent sales, please check out the weekly analysis section on the Nexus Mutual Forum. Now I want to open the space up for any member questions or anything that you want to raise right now. I know Brave sometimes has really interesting insights at the start of the call. I wonder if any of the listeners would like to chip in with their thoughts on some of the market movements in DeFi, or Brave, if you have any questions to us.
Yeah, I mean, I think my open question to people is always, what are you interested in DeFi, or what protocols are you using in DeFi?
I can maybe chip in with a little experience. I come from a country where it's harder to save up because there's a lot of inflation. And so the DSR has been, or, keeping my stable coins in DeFi has been a good way to go for me. And I think for a lot of other people living in high inflation countries out there, it's really a viable option. It's one of the really strong arguments about staying in DeFi. And I really like this route in DeFi. And I wonder what you think, Brave, because you come from a different background, and I wonder how DeFi has played a role in your financial planning.
Yeah, I mean, I would say there's a few different things. When I look across DeFi all the time just to look at what the yield landscape looks like, looking at new protocols to list on Nexus Mutual. And a lot of what I look for is, what is unique and interesting for myself if I personally deploy any funds somewhere. I look at the level of complexity. If I can, just using something that I can deposit some stable coins into and earn somewhere around the base rate, if not a little bit higher than the base rate of yield. This is kind of what I'm looking for. But a lot of times I'm looking for, passive ways to deposit ETH somewhere and earn on my ETH assets. Like I highlight in my State of DeFi Yields report, a lot of people like to trade, tokens back and forth to try and make a profit. But, I'm busy working. I'm busy doing a million things. So it's nice just to deposit, an ETH correlated pair into like a beefy vault, and then generate yield on my ETH natively. And then of course I underwrite risk within the mutual. I have my own staking pool where I stake NXM and underwrite risk, and I've been able to earn what is that right now? It's a little over 13% on my NXM, and of course NXM is correlated to ETH because there's ETH backing it in the capital pool. So, these are the main things that I'm doing. But a lot of stuff that I'm looking for is where can I earn on my stables or on my ETH where I can kind of outperform certain areas of the market, or where can I deposit stable coins to earn a rate that would be similar to what I would earn, let's say, in the U.S. stock market, but just by putting it into a yield optimizer or something along those lines. So that's personally, what I do when I'm depositing into different DeFi protocols, or what I'm looking for when I deposit in DeFi.
Thanks for sharing that, Brave. I definitely feel like the passive side of things is also quite interesting for myself as well. And if no other listener has anything to chip in at this time, I'd like to ask one last time if Brave, you want to bring anything up, or if there are any questions.
Yeah, I think from my side, there's just a couple of things. One is we've added some new listings in the UI. This is in our newsletter too, but I thought I'd just run through some of them. So we've added Gearbox V3. That's been very popular for the USDE and the liquid risk staking token leverage strategies. But if you're just somebody who wants to deposit on the passive side, for ETH, it's been over 20%, variable APY on ETH, and for USDC, it's been like over 30% because of the demand for leverage on the Athena strategy. FX protocol, we listed Camelot and Arrakis as well. We've also listed Prisma, which is a protocol where you can mint the MKD USD, their stable coin. So you can put in liquid restaking tokens or other liquid staking tokens to mint that. There's a bunch of yield strategies through Convex and different things like that for Prisma. So we've listed Prisma, we listed PX ETH, as I had mentioned, NFT Perp, and then Beethoven X as well have all been listed in the Nexus Mutual UI. And so you can buy cover on those. And those will be added to OpenCover in the near future as well. And then just a reminder to come and join us on our interview tomorrow with Justin from Grid Plus. I think it's going to be really great. If you don't already have a Grid Plus Lattice 1, you can join, and we're going to do a raffle to give one of those away on the call as well. So definitely a great conversation and a chance to win what is, in my personal opinion, the best hardware wallet out there on the market. So yeah, those are the last points that I have to make before we kind of wrap things up. And I see we have one request. Hello. You should be able to unmute yourself and speak, Alpha Block.
Yes. Hey guys, can you hear me?
Yes, we can. How's it going?
Very good, very good. I just wanted to chime in really briefly to say thank you. I think it was a really, really comprehensive overview and most interesting. So thank you so much. And then this may be like a very basic question, but I haven't been kind of following up with everything in the Nexus world. So I just wonder if you could simplify like what's the value proposition here? So I'm hearing these yields of 20, 30%. So and then of course there is all this contract risk. So if I wanted to eliminate that risk with Nexus, could you say I'm kind of locking in like a lower risk yield? And what is that number? So if I start at 2025, once I'm covered, what is my leftover yield that I'm collecting and that I'm kind of locking in beyond smart contract risk? Is there a simple number to that question?
Yeah, well, it depends. It depends on the strategy, right? But like if I go back and I talk about like urine juice vaults, for example, we have that bundle protocol cover right now that's priced at about 6.75. And so if you're depositing into the DAI juice vaults, which is around, what did I say? I think it's 36. I'll just check really quick. Then you're talking around 29 to 30% on DAI within, yeah, that is what it is. It's just a little over 36. So you're talking about roughly 30% variable APR in the urine juice vaults if you're buying that bundle coverage, which gives you protections against the two underlying protocols there. For something like Aave, Aave V3, I think, is around 5% is what people are underwriting it for. Within the mutual, for something like Pendle, it's like 5.87%. For some of the other bundled products like Beefy and Curve and Beefy and Compound, that is around like 5.8. So again, it depends on some of the yield opportunities, but
right.
Yeah,
But it leaves a lot of room, basically, a lot of room, right?
Yeah, it leaves quite a bit of room on the majority of these. So if the base yield is in the double digits, you're going to have typically plenty of room. I think the only difference is, like I talked about with dynamic pricing, if there's a bunch of people that buy cover or one person that buys a massive cover for something like Pendle, that'll shift that price back up. And so you might have to wait, several days for the price to come back down. But yeah, generally speaking, the pricing on cover is, pretty affordable. It just depends who's underwriting the risk, because there's multiple different underwriters and they set their own prices for the products.
I hear you.
Yeah.
It sounds like a no-brainer, like with these yields, like why wouldn't you do it? You're cutting off dramatic risk for little money. From what I'm hearing, it sounds like a really strong value proposition, guys. So I think I'm going to look into it. Thank you.
Yeah, you're very welcome. And again, if you want to join the mutual as a member, you can do that. Or if you just want to buy cover without going through KYC, you can do that through OpenCover on Base, Arbitrum, or Optimism as well.
And one final question, if I may.
Sure.
So I seem to remember back in the day hearing that at the end of the day, Nexus has an element that is kind of locked in the contract, but then there is a human decision at the end, for these claims. So to what extent are you kind of guaranteed that if the contract materializes, the board won't go rogue or something, and then ultimately you actually were taking more risk than you realized? I'm sure you get this question all the time or something like it.
Yeah, we do. But it's a good question. It's important to ask these questions. So there's two main things. One of them is there's fraud protection built into the claims process. So not anybody can just go in and vote on claims. One of the caveats is if you want to vote as a claims assessor, you have to stake NXM to vote on claims. So if somebody's going to go in and try to deny a legitimate claim, they have to put in a certain amount of NXM. The people that are assessing these claims are looking at the validity of the claim. They're not deciding, do I want to pay this out or don't I? So if it's very clear, like if it's a reentrancy attack and there's a loss of funds, this would be something that's covered under the protocol cover provisions, right? This is an unintended use of a smart contract that results in a loss. So if someone votes to deny that claim, they're basically in breach, right? And that is a fraudulent assessment. So there's two things that'll happen. One of them is that the advisory board can take action to burn their NXM. So if you've staked, let's say, $10,000 or $100,000 worth of NXM, you're going to lose that capital. The second thing is they can reverse their vote decision. So if they are, let's say, somebody with a lot of voting weight that decides to vote, then they're going to lose their capital, and their ultimate decision that they had voted with can be reversed by the advisory board. So you're basically trying to deny a claim by putting up capital that you're risking if you're caught, which there's been one example of someone doing it, and it wasn't someone trying to deny a legitimate claim. It was someone trying to push through an illegitimate one. Yeah.
Oh, I see.
So,
but like,
but
theoretically, if they coordinate it, like I understand that, like as a one-off, it's like you don't have the incentive is for you not to do it. But if something major happened, could theoretically, ultimately, there is a human layer, right?
There is, yeah. So it's at the end of the day, it's people who stake NXM and assess claims. But even if you have a lot of people that coordinate, again, the advisory board has the power to burn that NXM stake. So it's not something that goes up to a vote. It's just the advisory board, which is 5 longtime aligned members that vote on these things. The other thing is people who are acting as risk assessors that stake NXM and underwrite risk, they can't take that same capital and then stake it in risk assessment. So if someone is trying to deny a legitimate claim, they still have to stake NXM in excess of what they have in risk assessment, because that can't be used to vote on claims. So the economic incentive just isn't there to deny a legitimate claim. The other thing is when you're underwriting risk, you're basically sharing risk with other members of the mutual who are underwriting risk. So your loss isn't going to be in total of what claim payouts are. It's going to be shared across the people that are underwriting this risk. So the economic incentive for you to deny a legitimate claim just isn't there based on our fraud prevention design.
That sounds really, really cool. And I just want to say something quick. Like I think we're living some really interesting times, and I know that there is all this talk about meme coins and whatnot, but I think what you're doing, guys, is like really incredible. You know, that there can be this algorithmic system where people are underwriting risk to one another in a kind of in a rules-based system provided by smart contracts. That is incredible, but somehow it's still not kind of what people are appreciating. So I just wanted to say congrats for what you're doing, guys. And I hope there is more talk about DeFi and a little bit less about meme coin world.
I 100% agree. I also think what we do is fascinating, and yeah, we're expanding the different kinds of risks that we're underwriting, and yeah, I mean, yeah, I'm very happy that that you enjoyed the call and that you're enthusiastic about the mutual. So if you have any more questions after the call, or if you want to reach out on Discord, just reach out to us and send us a message. So thanks so much.
Thank you so much, guys. Cheers.
All right. Yeah. If there's nothing from anybody else, then I think it's probably about time, Sam, for us to wrap up the call. We're about at time.
Yeah, we are. Thanks a lot, guys. This has been really cool. It has been also great to hear your enthusiasm of the block. Always happy to have you here on the call with any other questions, or also on Discord. And yeah, thanks everybody for joining us today. We're gonna meet again tomorrow for the Covering DeFi interview series first episode with Justin from Grid Plus and Brave. Hope to see you there, and also hope to see you in 2 weeks' time for our community call again, where we'll recap the latest state of DeFi in yields and risk. Take care, and see you around. Bye.
Bye, everybody.